everyone. Welcome to Share and Review. And like I said on Tuesday, I am going to discuss Infratil today. And before I do, remember that this is my views. It's education only, and no way is it tailored or any personalised advice whatsoever. If you're wanting personalised advice, then you do need to actually go and seek your own financial advisor. Okay, let's jump in and share my screen. Right, so here I have brought up Infratil, and again, I've just got it over a 2-year period. I've got my normal moving averages on there, being the 15-week and 30-week moving averages. And to me, this is a lovely chart. It's heading in the right direction, which is the type of share that I want to look for. You can actually see that whilst you've got lumps and bumps along the way, you can see that the left-hand side of the chart is lower than the right-hand side. Very, very simple. And there are more green candles showing on this chart than red. Obviously, you are going to get red periods where the market is going to move down. And like I always used to say to clients when I was working with them, a share is a bit like us. You can't keep breathing out, okay? At some point, you've got to take a breath in. And to me, that's just the normal movements of the market. You're going to see these normal ups and downs, okay? Infratil, they do pay a regular dividend, as you can see there, back in November and May. So obviously we'll probably have another one coming up in May. Usually when a share goes ex-dividend, and you can see that here, the share will quite often fall back a little bit, okay? It was getting extended above these moving averages back here in about May. The dividend was announced, and you quite often see quite a strong rally, to be honest, when a share is going to go ex-dividend, because there are investors out there that do like to be holding the share on the date that they go ex-dividend and then sell it the following day or a few days later. So that's something to bear in mind as well, that quite often shares will fall. This one here is probably a little bit of an exception. You just had one day really that it went down, you had a bit of flatness, but then obviously it's taken off again, which is great. Okay, you can see that back here in 22, and a similar thing here back in November. You had a little bit of rising, then it moved up again. So Infratil to me is looking great. It's certainly the type of share that I want to invest in. You've got good, strong growth there, and it's heading in the right direction. Even if I put this over a 5-year chart, same story really. You've got the COVID crash through here, where the share fell. We got $5.55, and at its lowest, it looks like it might have gone to about $3.90. Okay, and then since then, we've had a lovely, strong recovery. Now, even if I take this out further to max, let's see how far that goes. So it takes us back to 2000. So for the last 24 years, look at that chart. It is a little bit noisy, but you can stand back and see how strong this company has been performing. And those are the sorts of things that I definitely want to look at. And I've said that before when I'm investing into a share. Now, I'm also going to run the indicator of and just make a comparison for the NZSX 50 and see what that is doing. Now, this is great. This is also something that I look at. So obviously there's give or take 50 companies on the NZSX 50. Sometimes it might be 49, sometimes it might be 51, just depends. But basically the NZSX 50 is obviously all of those companies put in the melting pot, and how is it performing. And Infratil, as you can see, is outperforming the New Zealand Stock Exchange, or the NZSX 50. And that is a very, very good indicator. And each week when I go through and look for potential trades to take, I want to make sure that that share is trading above the NZSX 50. So it's great that we're seeing the NZSX 50 rising, but it's not a full participation. So what I mean there is not all companies on our main board are performing in that growth or taking that growth of the main board up. Infratil is certainly one. And when I do my research, there's probably only about 6 or 7 shares that are actually contributing to the performance of our main board, this NZSX 50. The rest are actually laggards, so they're actually dragging that performance down. So like I said, this is certainly something that I want to look at when I'm buying a share. You can also see down here I've got the MACD on, so that's a moving average convergence divergence, and it just gives an indicator potentially as to what's happening in the market. as well with this particular share. And again, both of these are pointing up. I don't spend a lot of time looking at this, but I want to make sure that if my share's trending up, so is the MACD and also this RSI indicator. And we'll look at it on a week, and I will also take it back and look at it on a day. Don't worry that it's below the NZD 650 there. I'm really concentrating on making sure that both the MACD and the RSI, we've got a little bit of a dip there, but they're both heading in the right direction. So that's the sort of thing that I am looking back. I'll just take that back to the week. So I hope you're getting some value out of these. I really wanted to share Infratil. It is certainly a popular one for me. It is one that I am holding in my portfolio, and I have been holding it for quite some time. The other thing with Infratil that I tend to like to do if I can with shares, and that is they have dividend reinvestment plan. So that means when they pay out a percentage of their profits as dividends, and this is my view, I like to receive it as dividends, as reinvested into more shares rather than a cash payment. And the reason for that is simply because by buying more shares in a company that's going up like that, quite often they will offer them at a slight discount to what the market price is. And also, I don't pay brokerage fees on them. So by reinvesting them back in, and hopefully if the share keeps trending up, as Infratil certainly has been over the period I was showing you, then those shares are actually going to be worth more down the track. Obviously, everyone's situation is different, and some people do like to have the cash dividends. Maybe they like to use that as part of their own cash flow, and that's totally fine as well. But that's just what I do. So I hope you're getting some value out of this. I love creating them, and I love your comments and feedback. It's very much appreciated. And remember, I am also doing a share service where I'm cutting out the noise and just offering to you potential shares that meet my buying requirements. So if you want to come along and take a look at that, you're welcome. Please follow the links and you'll be able to jump on there. There's a 30-day free trial. Obviously, I'm just highlighting what I like, and you do need to do your own research. It's certainly not tailored advice, but love it if you would like to come along and join that and see what you think. Until next week, have a great day. Thanks very much.